There are three factors that I keep in back of my mind when I'm trying to identify high probability setups: structure, pattern, and behavior. These three things have to go through your decision-making process if you want to determine whether the setup is high probability or not. And today started as a range structure. And in trading ranges, we're going to have to identify our highs for the day and our lows for the days, our key levels. So this is the overnight high, this is the overnight low, and the balance of probabilities, these key levels may come into play later on throughout the day. Now, as the price is running up higher above this resistance, we can see the price never really came back and tested the breakout area. This is the breakout area for trading range, and in price action, most breakouts of trading ranges will fail and price will eventually come back and test these breakout areas. You guys can see how price is reacting. It broke above the trading range and is coming back and pulling back to the breakout area. Now we have a break of a trend line, a new extreme going to be formed that fulfilled the trend line rule. We have a new high. This is the highest high of this entire move up, and we have a first entry long, pullback, second entry long. So the pattern is second entry long, correct? But the structure is trading range, and the uptrend played out and had a break at a new extreme. So this isn't a good structure for going long. It is a pattern to like a pullback, but the behavior is horrible. Behavior meaning how the signal bar is looking, how the pattern form. We can see that the signal bar is bearish, and then the signal bar is not great as well. It has a little bit of a bullish body, but it has a bearish stem at the top. So this is not an entry you want to go long. Now, if anything, this is now a great trap as a high probability setup. New high, first entry long, pullback, second entry long, failure. Price broke higher, came back, tested the breakout area, but with the break and a new high being formed, and it's such a nice trap at the very high of the trading range, you guys can see price tick one tick higher, instantly reverse down. So this is a great pattern. It's a failed second entry short. The behavior is great. This is a great signal bar, and the structure is in your favor because you're expecting for price to go to the downside. When I was watching this live, I unfortunately had my channel slightly differently. I didn't have my channel drawn with the break. I had my channel like this. This was my channel when I was watching this live. So I didn't take this entry myself because I really didn't have a break in a new extreme. So I didn't want to go short directly into the channel. A lot of times, close in price action is close enough, and you don't have to be perfect with your trend lines. But today was one of those days where you just had to have the trend line absolutely tight, absolutely perfect for you to correctly identify the structure. Most often than not, it's completely okay just to be close enough. Today, this tiny little break in new extreme was the game changer when it comes to this entry right here. Now, as the price is pushing lower, right now I'm expecting for price to reach the low of the day, the target. I'm expecting for price to act in a trading range because on a bigger picture, this is a range structure. So this was a failed breakout, this was the reversal pattern, and price is right now pushing lower. Now, when I'm watching this, I'm sitting on my hands because this is not a high probability setup. Remember, all these three things have to go through my mind if I want to see what the setup is, and it's going to be high probability setup. I can see that we have a new low and we have just a first entry. So already straight off the bat, we don't have a pattern. We don't have a two-legged pullback at the key entry point. We have a good behavior. Structure is bearish downtrend, but this is just a first entry. By the time second entry forms, we have to reset the count because this low is lower, and we have a first entry short, a second entry short. But right now we're going sideways. We're far away from key entry point, and this is not the great setup to go short just yet. So unfortunately, no high probability setup, and price is going without us. So I'm just sitting on my hands, waiting patiently. The trend line got confirmed right here, and the trend line is fitting nicely. So now that I see first break for the trend line, I'm expecting for price to create new extreme. So I'm going to draw the shortened trend line, and I have a break, and I expect for price to create new high and give me a second entry short, and it never triggered. Price created, pushed to a new low, micro double bottom, and keeps pushing back up. So there is only a first entry, so I cannot take this entry because it's a first entry, even though I expect for price to push lower and create new extreme, and I have my target as the low of the day. This is not a great high probability setup price action wise. Okay, these setups are not reliable. There's market pushing higher, and we have a new low, first entry short, pullback, second entry short. Now I want to talk about this setup a little bit before we talked about this setup, because I reset the count when I was watching this live, and I treated it as an attempt for price to create new low, and I drew this double bottom. So I reset the count, but it can be treated as a new low, first entry short, second entry short, and this would have trapped a lot of traders. If you took this trade, I think you follow the rules correctly, because you really need a level of experience and a gut feeling to help you identify that something is not right about this trade. So if you took this trade, because it is a second entry short, it is at the EMA and you still expect new extreme to be formed, so definitely it is a small bar, so entry that is worth taking. The fact that you created a spot on double bottom and you have to redraw the trend line again, so this entry is inside the trend line, and also this second entry is way too wide from this first entry. Generally, you should get a second entry short quite after the first entry. And take a look at the big gap that this formed right here. Price really stalled a long time. Take a look how many bars price needed to create additional second entry. This is not really how second entry works. Take a look how first entry long, second entry long, how it forms right after the first entry. There's a big gap, and this is quite a common trap. So not the best entry, but once the price resets the count, you have a first entry short, pullback, second entry short. Uptrend played out with the breakout in new extreme, and we have a triple top holding. One top, double top, triple top. Key entry point is holding. So what is the structure? Bearish downtrend. I'm at the key entry point and I have a triple top. Okay. What is the pattern? Pattern is two-legged pullback. Okay. And what is the behavior? Behavior is a nice bearish signal bar. In fact, you take to one tick higher and the price instantly reversed down, indicating that sellers are in control and price created new extreme. So this was absolutely gorgeous high probability setup. Unfortunately, this cannot be entered. I tried to enter this with the limit order and this completely went out without me. And today was very peculiar because I tried to enter 4 trades and 3 of them I got left behind, because today market was extremely slow. It took a lot of time for a setup to appear. But once this setup formed, it always took millisecond for price instantly push and leave you behind and never tick back. So it was quite odd today that the patterns took a long time to set up, but the entry on itself and the scalp, it would have been made instantly, and it was extremely hard to enter this real time. You have a new low right here. So according to trendline rule, downtrend played out with the break and new low, but when I'm watching this, I expect for price to create a second leg to a new extreme. I still expect for price to reach the low of the day. That's my target. So when I'm watching this, I expect two-legged pullback down, especially after such a substantial downtrend. We have a new low, first entry short, second entry short, new high, first entry long, pullback, second entry long. This is a double setup in one. This would have been great because this would have been as a breakout pullback and EMA keeps holding price. Unfortunately, you cannot go short below this bar. By the time you get this big bearish bar, it's way too big. You're shorting the low of the entire downtrend, not safe entry. So great entry had the signal bar been better, but like that, you cannot enter the signal bar like that, unfortunately. Notice the price created 2 legs in the extreme, which is according to trendline rules indicating that we're going to get correction or straight up reversal. Price hesitated and strongly pushed above EMA. So we have a possibility of reversal. But if you want to reverse the market, we need to take the safe entry and we need to take the reversal pattern. And by the way, notice these lows at the bottom. This can be considered as a reset the count, even though this is technically the low of the entire move. Once you see congestion, you can basically take the entire congestion, take the last bar and reset the bar there. So you guys can see we have a new low, first entry short, second entry short failure. You can treat it like that, but technically you can take this congestion, reset the count here. You can draw the support right here and you can treat it as this is going to be completely the double bottom reset the count. And you have a first entry short pullback, second entry short failure. This would be a reversal pattern, but when it comes to good reversal patterns, they have to set up near exponential moving average. Take a look at the context. This is the second entry short, but is the structure in favor of second entry short? It's not, because the structure bearish downtrend played out. Overall, it's a trading range, and we expect for price to now reverse. So the structure is bullish. So any second entry short is going to be a trap. Take a look at the structure trading range. You expect for price to go from here all the way up to here. So this is not a great short. In fact, if it's going to trap traders, it's going to be a great long, but this was really far away from EMA. So just sitting on your hands, watching this market patiently go. After price created highs high, you're resetting the count. This is now a structure of a bullish trend. We have a channel working higher. And when I'm locking this, my focus is now strictly on second entry long. Not only I expect for price to go from the bottom to the resistance, so I expect for trading range rules to apply. I expect for trendline rule to apply as well. After a break of a trend line, which right now we have a multiple bars that are closing outside, I expect for them to pull back and create new high of this uptrend. New high meaning high that is higher than this high right here. At the same time, I'm drawing the short-term correction. So I have a new high, first entry long, pull back, second entry long. There's a little break, a little close outside to the lower and reversal. So there is a micro break, new low, and a reverse on the same bar. This is a gorgeous second entry long, extremely reliable and high probability setup. This is the simple price action, and exact same thing happened right here. It took 30 minutes for this beautiful setup to appear. Once it appeared, it gapped open, never came back, and created a quick, easy scalp. So you can only enter this with the stop order, and not only that, you have to have your stop order prepared. You managed to take it. This is one of the quickest scalps you ever made. But once again, structure, bullish trend, and a trading range. You expect new high. Pattern is two-legged pullback. Okay, so I'm taking a high probability setup, and behavior is a nice bullish bar. EMA key entry point is holding price. So this was a high probability setup. And notice that you don't get too many high probability setups today. Unless you had your trend line drawn really good, you can only take this entry right here, and this was probably way too fast. So today you just have to be patient, and you cannot get riled up by not being able to take entries. If you miss this second entry long, market can give us additional information. Markets can be generous and offer us additional entry, and this is my favorite, high-low entry confirmation of a two-legged pullback. When market gives you additional information, you have to pay for it, and you pay for it when your entry point is much higher than the initial second entry long would have been, because there are no freebies in trading. So this is a higher low confirmation of a two-legged pullback. You still expect new high to be formed. You still expect for price to reach the key level overnight high. But this bar, as you can see, is extremely gigantic, and the risk to reward on this bar is not great. Plus, the scalp was already made when it triggered above this bar. So this is not the great behavior. Structure and pattern are perfect, but the behavior is horrible because the pattern itself, you cannot go long above this bar. You don't even have engulfing, meaning you didn't even trigger below and reversed. And you cannot go long all the way here because now you're already close to the previous swing. So this is not ideal. Scalp was made, but the entry is not great. Now, when I see that price created two legs to a new extreme and we just reached the resistance, we tested the key level for their trading range, we expect correction or straight up reversal. So we are not looking to go long. As we are at the highest point of this entire move, I'm going to draw the short-term downtrend. I have a break and I have an attempt to create new extreme. And in fact, I have a new low, first entry short, pull back higher, second entry short. This is a second entry short. Once the uptrend played out, we're coming from the top of the trading range, and we're expecting for a new extreme of this short-term downtrend to be expected, to be retested. So the structure is great, pattern is great, second entry short, but the behavior is not ideal. Even though the signal bar is a very full bearish trend bar, take a look how many bars are stacked there. To be honest with you, I tried to enter this trade. I really liked it at the time. Second entry short coming from the highs. You need a new extreme for this downtrend. Once again, this happened really quickly. It first traded up higher and then it broke lower and instantly pushed down. So it created a quick, easy scalp. But looking back, given how congested this is not the safest high probability setup yet. There are much better entries according to price action than this entry right here. But hopefully you guys understand the context. Price created a break, moved to a new extreme, triple bottom, and price reversed higher. At this point on, EMA flattened, EMA is no longer pointing up, and EMA is completely flat. So this is indicating to us that we are in a sideways trading range, and you can really start scalping, buy low, sell high, because this is now a very small, tight trading range. Even though you traded up into trading range, by the time we are working sideways for so long, you can even take sells, because this is overall pattern is trading range, okay? This is not one of those strong up moves strong trend that you trade up into trading range. This is still quite mediocre, very medium sized channel to short-term channel in this trading range. So this is just a short-term sideways movement, and I'm completely fine with you scalping the high and buying the bottom at the same time. There's a new low, first entry short, second entry short, price created a break, new extreme for the uptrend. Actually, now that I'm looking at it, let me see. You may have a little bit. Now this is valid. This is a perfect micro double bottom. So this is a valid second entry short. It is at the top of the trading range. Uptrend played out with the break and a new extreme. And this is a high probability setup. Normally, if you're unsure, if you're taking the setup at the double top in trading range, you can wait for a lower high setup. Unfortunately, this lower high is still close above the EMA. Had this lower high closed below EMA, this would have been a great high probability setup, because lower high is a confirmation setup of either second entry long, for example, double top, double bottom, filled breakout, etc. So the lower high will confirm the double top, but once again, you have to pay for it with a little bit later entry. So your entry would have been right here, would have been quick, easy scalp. Price keeps bouncing in this trading range. EMA is getting completely flat. It's starting to get very congested. You need to wait for price to come to either this extreme or this extreme. This is how you play the trading ranges. You're completely now focusing on the trading range. Same thing right here. Uptrend working higher, break, new extreme formed, new low, first entry short, second entry short, repeat pattern of this. This is not only a second entry short, this is a micro failed breakout above this trading range, and most breakouts of trading ranges will fail. We have a multiple tops right here. Price broke higher. Everybody who is buying on the breakout got trapped, and this was the first trade for the day that I took, and it was a quick, easy scalp. And in fact, here's a little kicker. Scalp was made, price came back to the very tick. I moved my stop loss to the break even. They stopped my runner at the break even, and price never looked back, and this was the highest point of this entire trading range, and price continued pushing lower. So this is sometimes unfortunate. Sometimes you will survive by one tick, but sometimes you will get stopped to the very tick and you will miss a gigantic runner, because if you're looking at this like this, I missed a very substantial move. This is 30-point move down, and this is very reasonable to catch because you're expected to take your profit at the very bottom of the trading range. This is where you would put your target profit. So I just missed a 30-point move down, unfortunately, but you guys can see how powerful it is to hold the runner when you're fading the breakout. Same thing right here when you're breaking above the resistance. Same thing right here. Every single time you're trying to fade the breakout of the major trading range, try to hold the runners, because a lot of times you can catch the very high or very low for the day, and all of these three factors combined work perfectly. As the price is pushing lower right now, we have a strong bearish momentum. We have a first break for the downtrend, and we expect for price to create new extreme. But I have to respect the short-term uptrend working higher. I have a break and a new extreme. So once I have a break and a new extreme, this is indicating to me that buyers are no longer in control and I can start looking to sell. Structure, bearish downtrend. I expect for price to create new extreme. Pattern is a two-legged pullback. Behavior is great bearish bar. But in this instance, price managed to push above EMA, and not only that, we have 1, 2, 3, 4, 5, 6 bars stacked right next to each other. This is such a great signal bar that it is really worth entering. Had this bar closed few ticks below EMA, this would have been absolutely gorgeous. I will mark it slightly aggressive because you really have to know what you're doing. I don't like how many bars there are stacked, and even the fact that you pushed above EMA is a little bit concerning, but you know that you have a break and a new extreme, so you know that the uptrend played out, and the major downtrend right now still needs for price to create new extreme. But a little bit unfortunate, the price ended up closing above the EMA, but still market was pushing lower. You guys can see what the runner this would have still been. The market is pushing lower right here. We're going to zoom out and we see that we are very far from the key level for the day. There is a break of this short-term downtrend, new low, pullback, another new low, but price keeps pushing lower and price keeps pushing lower. We're really getting far away from this important support. So at this time, this is the time where I'm going to draw a downtrend like this. So right now I'll expect for price to give me a second entry short or filled second entry long, but there is no additional high probability setup. So today, very few setups according to price action rules. Those few setups that you got, you had to act quickly. Price created a new low, first entry short, but there is no second entry short at the key entry point, and in fact price is completely reversing higher. You don't want to go long just yet because the structure right now is quite a strong or bearish downtrend, but you don't want to go short above EMA. If I'm selling, I need to see a bearish momentum. I need to see price to push below EMA. I have a new low, first entry long, pullback, second entry long. I was expecting for price to give me a failed second entry long so I can get a new extreme of this entire bigger uptrend that right now had a break, but in fact it never happened and price pushed strongly above EMA. So this completely changed the momentum. Once you see this such a strong move up, you probably expect for price to create first new high for this correction before pushing it lower. There's a new low, first entry short, pull back higher, second entry short, failure. EMA keeps holding price. You expect for price to create new extreme for the short-term uptrend. This is a great bullish bar, great structure, pattern, and behavior. Market is pushing higher and market created a new extreme. So right now you're stop looking for longs, and in fact you're expecting for price to give you one last time to push to create new extreme, but it never really happened. Price just consolidated, EMA got completely flat, and from that point on there are no high probability setups yet. When I'm just watching this, I'm sitting on my hands because structure is very unclear, and it's completely okay to sit on your hands when the structure is not giving you any decent high probability setup. There's a second entry long, EMA keeps holding price, but there is a short-term downtrend and the signal bars are horrible. You get a break, new low for the short-term downtrend, which tells you that the downtrend played out, but it's just a first entry. It could be a decent entry, but I don't really see it as that great entry. New high formed, market reversed lower. Once I see such a strong bearish move down, I'm expecting for price to give me a second entry short at the EMA, and it never happened. Price just pushed strongly above EMA without second entry, gave you a failed second entry short, but you cannot go long above bearish bar far away from EMA. Price strongly pushed below EMA, gave you this horrible signal bar. You can treat it as a continuation of a failed second entry short, but going long above this signal bar, actually there was a nice follow through that would have been decent, but there were really not that great setups later on before the market closed. The last setup I liked is this failed second entry long, new high, first entry long, pullback, second entry long. Why? Because uptrend played out with the break, 2 legs to a new extreme, double top, and this is a small trading range that is holding price. But overall, very few setups at this point on, and very few setups even today. You really had to act quick, and some of these setups just didn't really have great signal bars. So that just comes with the territory. There were still quite a few good setups that you can capitalize on, and you never can get frustrated when you miss a run like that, because that's counterproductive. If I'm going to get frustrated that I missed a 40-point runner, that's only going to affect my future trades and my state of mind. I need to stay focused so I can safely recognize the next opportunity in the market. Sometimes we will survive by one tick, sometimes we will get stopped out just by one tick. In the long run, it really doesn't matter that much. You will get numb to this, and it will evens out in the long run. So I hope you had a great trading day. I hope the video was helpful, educational, and I'm going to see you guys in the next one. Take care, everybody.